I do want to welcome in our next guest this morning. Joining us, Ted Thatcher, president of Bright Lake Wealth Management. Ted, thanks for joining us on this Friday morning. I'd love to get your thought. We are seeing a bit of a reversal in the markets after what has been a very choppy week, despite getting this government shutdown that everybody has been waiting for.
Yeah, Marley, it's great to be with you. It is choppy. I mean, the truth is, I think that volatility has almost been the name of the game, seems like all year. And so obviously the government shutdown kind of coming to a close, I think is a good thing for Wall Street. Of course, Wall Street hates uncertainty, and it does, give the consumer hopefully some confidence, if for nothing else, the travel season going into the holidays here. But we are seeing the markets, bob around. Yesterday, the markets were down. Today, this morning, looks like they are recovering. But when we look at the macro picture, I think that we have to look at it through two lenses. I think we have to look at the consumer. It used to be the case that when we talked about the economy, that's all we talked about. We talked about just the consumer. But there has been this huge discrepancy the last several years between really what's happening on Wall Street and what's happening on Main Street for the average American consumer.
You mentioned that. So as we take a look at the consumer, and we're in this absence of data that we now know we may never get. We've got sentiment. We know it's at some of the lowest levels, close to the lowest levels recorded. And yet we're still getting results showing from Disney that people are still going to the parks. People are still spending. People are still buying. The airlines saying they're still selling tickets. What is that signaling to you about the consumer and also more broadly about the economy?
It really is a great question. And of course, it comes with a whole lot of nuance here. Really, where I see the strength in the consumer really is at the high end of the consumer. If you dived into the retail sales numbers and different things like that, it shows us that the consumer is strong if they have that high income. And it kind of shows this almost class disparity between lower and even middle income households that are struggling, that are getting pinched by inflation and all the cost increases that we've seen. Of course, again, we do see on the high end that consumer is more durable. But my concern also, of course, is with what data we're going to get on the labor numbers. We've been missing the data, of course, because of the government shutdown. And so I'm hopeful that we'll get some of it the next several weeks. But there's been a trend, too, on that of it being revised again in many cases.
So let's talk about this inflation number. If we get the CPI, it is expected to come on the day of the rate cut decision. How impactful is that? How are decisions even supposed to be made when the only data that isn't going to have been disrupted potentially, despite the fact that you mentioned we do get these revisions constantly, where we would have had a month of data collection, will arrive on the day that the decision itself is supposed to be announced?
It's a great question. I mean, I think it puts the Fed in a really hard place. And we've talked about before, the Fed isn't just Jerome Powell, leading the pack anymore. Because of all the different data points and the different stories they're telling, the Fed members are each interpreting them differently. And so I would expect, actually, no matter what happens, to probably get a little bit more infighting from the different Fed members. That said, though, at the last Fed meeting, the press released the official statement that they put out. Jerome Powell did underline and highlight one thing specifically that stands out to me. He specifically did say that they are more concerned about the potential downside risks of the labor market, essentially, the unemployment rate slipping further and further over the inflation data. So unless there are some, I'll say, non-governmental reporting signs that the inflation rate is just getting way out of control all of a sudden, I would expect that Powell would bend more toward that same underwriting that he had mentioned at the last Fed meeting, more focused specifically on the labor side.
So on the labor side, we have gotten some private data. We got ADP coming out saying that, we shed more than 11,000 jobs in October. We will, in theory, if they come out when they're supposed to, calendar still questionable, should come out December 5th. So we should have at least a jobs report ahead of that Fed meeting. If that remains the focus, and we know that December is a live meeting, what do you anticipate happening there? What do you anticipate that data showing?
It's a great question. I think at the end of the day, because of the trends that we've seen, I expect them to be a little bit more of the gloomy numbers. I don't think we're going to get anything that is, extreme, but we've seen the, jobs markets kind of erode a little bit. And I don't know. I don't know what we would expect other than to see that continue to tick down. Maybe there's a little bit of stabilization that can be sort of, propping things up because, employers do overstaffed typically going into the holiday season to anticipate all the extra sales volume and things. But honestly, I think that trend will continue to deteriorate, and until we see significant changes or significant data points to the contrary, I think that's what we have to expect. And so, if the Fed is seeing that that kind of data, I don't know how they're going to make a decision other than to continue to continue with their lowering strategy here. Before the last Fed meeting, I believe the chance of a 25 basis point cut was sitting at about 90%. Today, it sits at about 75%. And so we do track that probability. And given the large probability that it will occur, that's really what I do expect still at this point.
And so, with this uncertainty and the unknown of the data and the unknown of the action in December, where are you looking for opportunities? Where do you see potential opportunities in the market right now?
It's a great question. I mean, ultimately, to kind of look at the Wall Street side of this, regardless of what's going on with the consumer, the Fed policy and their decisions have huge effects on Wall Street. And it's really continued to push the AI trade, I think, the tailwind, if you will, of the lowering discussion from the Fed. And now, of course, investors, I think, really highlighted, of course, by all the choppy markets we've seen, are concerned about the AI bubble. We've heard that phrase cited, I don't know how many times. And, fair enough, you've seen really historic investors, Michael Burry, very notably this week, announcing these, large put positions on Palantir and NVIDIA. And it's hard to look at, a Palantir and see it trading at the multiples that it's trading at and be like, okay, well, it seems pretty reasonable that we might be out over our skis a little bit there. That said, though, I do still think that, there are huge tailwinds, especially if the Fed does continue its trend here for some large mega cap companies, very notably Alphabet. I'll also include Microsoft in this. If you looked at Q3 earnings, Google was up 16% year over year with huge gains in their cloud business. I want to say it was a 34% increase year over year. Their TPU business, they had a huge announcement of Anthropic buying that hardware from Google. And, you've seen also their Blue Link search business even continue to grow in revenue. And so if we are going to look for these tailwinds for opportunity in AI, I'd rather couple that with a legacy name like a Google that isn't just reliant on the future probability of AI revenue coming, but has so many other pieces of value within it that are already producing and still, despite all the commentary, continuing to grow, again, highlighted by that Blue Link search business growth.
Well, Ted, we appreciate you being with us to talk about opportunities and the state of the economy this morning. That's Ted Thatcher. Thanks again.